Hello, everybody. Welcome back. It is Mike Brown here with Remax in Toronto. One of the great things about starting this channel a little over a year ago is that it's forced me to become more educated about issues that are sort of on the periphery of the real estate market, not just the inventory and sales numbers and interest rates, but things like immigration, which we spoke of in the previous episode. As you likely heard by now, Canada has reduced its immigration target for permanent residency from around 500,000 a year to just below 380,000 for the next couple of years, at which point I believe they'll be reviewing the situation to see where they go from there. But that's not the entire picture on immigration, as you know. You see, there's a lot of temporary visas or student visas that are applied for on an annual basis. And during the COVID years, 2021 and 2022, we actually received over 1.4 million student visas issued in this country. So between the increase in permanent and temporary, we saw quite an uptick in the number of people who were coming here to either study or work. Well, the student visa numbers have been pulled back on as well. I believe they've set a target of below 400,000 for the temporary student visas, and they're going to be reevaluating that in the years to come as well. So all in all, between the two segments of permanent and temporary, we were seeing the numbers above 1.5 million, and those should be sliced pretty much in half in the years to come. And that should take some pressure off of the housing market.
It helps relieve the pressure.
Well, the economy in general here, perhaps. What's even more interesting, the vast majority of both the permanent and temporary residents were coming into southwestern Ontario. Well, it says, as you can see in the graph here, about 42% of them are coming into Ontario. And I'm pretty sure that there weren't a ton of people who are moving to the likes of Timmins and Sudbury and North Bay, if you know what I mean.
It's much too cold.
So that number's coming down. And it's coming down at a time when we're also seeing a pretty substantial increase in the rental inventory, to say the least. When I first started this channel back on June 1st of 2023, the average daily inventory for rental in the 416 area code between freehold and condominium units was hovering around just below 4,000 units. Well, today, that number looks like 9,250, so more than double. And it's not just in the rental market that we're seeing this, it's in the condominium resale market. The condominium resale market, June 1st of last year, was around 3,800, and we're pretty much closer to 7,000 as we sit here today on the 12th day of November. So there's a lot more selection in rental, and there's a lot more selection in the resale market if you want to buy. And I think what it's really telling us, as I've said numerous times on this channel, those are the investors who got into those, what they're calling dog crate condos. The condos that are under 500 square feet. And that's not the entire segment of the market, but it is a pretty substantial chunk of it. Well, they're having greater difficulty finding tenants. And as you've probably been reading in the news or hearing on social, the rental costs are actually starting to come down in the major urban centers of this country. And of course, Toronto is one of those. So we've got decreased immigration, increased inventory. A lot of the stock is being held by investors. And a lot of these investors are about to face renewal, if they haven't already, from the pandemic rate of, well, variable rate mortgages, HELOCs, what have you, were around 2%. It's pretty tough to do much better than about 4.25% right now. That's if you're going with a fixed rate mortgage. If you're going to be seeking out the variable rate market, you're still well over 5%. So I would say that there's really no wonder that the federal government is pushing back against these numbers.
We had no choice.
By incentivizing the housing market with things like 30-year amortization, increasing the price limit of a high ratio mortgage for a first-time buyer from under $1 million to just under 1.5 million, and offering up insured mortgages for people who want to build garden suites and basement apartments. I think it's probably necessary for them to do this because they themselves know that this massive cut to immigration could have some fallout in the real estate market.
You may be onto something, Robin.
And what I'm really trying to say to people is, despite the fact that we're seeing rate cuts from the Bank of Canada, and pretty much all of the major economic powers are looking at a rate reduction cycle from their central bank, that doesn't mean that real estate prices are going to take off again. And certainly in this segment of the market, which will also spill over to the freehold market, any agent who is out there telling you, the buyer, that you should have fear of missing out, well, I think you might want to seek a second opinion on that.
Sometimes you need a second opinion.
These numbers are pretty hard to deny, and if they continue in this trajectory, I think we're going to see increased difficulty in that segment of the market and likely in the freehold market as well. Anyhow, those are my thoughts for today. Let's get a look at that inventory story. Hey, once again, thanks for tuning in. What do you think about this topic that we're speaking of here today? Am I on the right track, or am I throwing up a red flag for no reason at all? If you have something that you want to share on this particular subject matter, post it in the comments below. And until the next episode, this is Mike Brown with RE/MAX, uncovering the real estate of real estate here in the GTA and Southwestern Ontario.